Good afternoon, friends. Welcome to this episode of Expert Speak. Really excited about this particular week because Bank Bazaar is running A to Z of credit cards. So every day, the team at Bank Bazaar is going to talk to you about how can you track your rewards, how can you redeem them, how is interest charge calculated, how is late fee calculated, how do you use your credit card wisely. And today, I'm really excited to invite to this show one of the foremost experts on the credit card industry in India today, Amarjit Singh Walia. He's the product head, credit cards at ICICI Bank. And I'm sure a lot of people listening in, right, have used his credit card. I myself was incredibly satisfied, right, when in 3 clicks, I first got access to the ICICI co-branded credit card, literally on the mobile app. Amarjit, welcome to the show.
Thank you, Adil. Thank you for inviting me.
So, Amarjit, you're a student of the industry. You like to track the way the industry is headed. Tell us, where is credit cards as an industry, right, headed over the next 5 to 10 years?
Oh, Adil, I think we have a long way to go. Though, of course, this industry clearly is moving at a CAGR, which is high CAGR, 22 to 25%. Some of us are doing slightly better than that as well. And for a country like ours, with the economy growing at the pace that it is, affluence growing for the pace that it is, I believe that in the next 5 years we should cross a very high mark, more than double the numbers that we have. We just about 9.1 crore cards as you speak, for a 95 crore plus debit cards in the country. Uh, Credit has to come into many more pockets, I would say, and clearly it has to go to nook and corner of the country. I'm very hopeful that this business will grow at a high CAGR in the next 5 years.
Yeah, and Amarjit, I think that you're ideally placed to talk about where that growth is going to come from because doing 4 lakh cards, and I looked at the latest RBI data earlier, at 4 lakh cards a month, right, you have a pulse for where growth is going to come from. So if we're going to bridge the gap between where we are today, where, like you said, India has, a 90 million cards, but China has 1 billion credit cards in force, what is going to take us from where India is today to where we are going to be 5-10 years from now?
So many factors, Adil. If you look at, if you really break down this, 91 million credit cards that we have today, unique customer will be much lower. Unique customers, it's anybody's guess, could be about 50% or 60% of that. To my mind, one is that beyond this 20 cities movement is a must because the affluence in Bharat is known and clearly, customers across are behaving in a manner that for the offtake of credit is important. Also, to my mind, the new to credit segment, which is a segment which is really looking at now, spending, and the patterns have changed quite a bit after COVID, and we've been observing that most of the merchant categories are doubling or tripling. So, to my mind, one large number of players have to come in, more banks have to issue cards, more alliances have to happen. The likes of Amazon, Flipkart that we've done, likes of Bank Bazaar Alliance that you've done, Bajaj, RBL Alliance, and so on and so forth. And therefore, many of these customers who don't have an access to the credit has to come in. So we are expanding in a very big way, both on the organic side of the business and inorganic side of the business, and also reaching out to every nook and corner of the country.
Correct. And I think you really brought up an interesting point when you spoke about alliances, right? Because when, for example, two organizations partner, it's access to another whole new set of 10, 20, 30, 40 million consumers. But to make it work must not be very easy, right, Amarjit? What do you think is the difference between the success you have created and 90% of those that don't end up working out?
Oh, that's a very important point, Adil. The what we've seen is that unless it is a win-win for a partner, for a customer, and the issuer, it does not work. So let me take some examples. What does the merchant want? Clearly, the merchant wants, or the partner for that matter, what do they want? A loyalty with the customer. They want a stickiness. They want customers to kind of frequent them, more often than not. The brand recall and so on and so forth. What does the issuer want? Issuer wants that the new to bank customers or more customers come in, cross sell grows, and at the same time, the spend and the top of the wallet card they get. What does a customer want? A customer also wants best of both worlds. Customer wants that here is a partner who's issuing the card, and they are bringing in certain, features, etc., etc. And what about, the other partner who's coming on the other side? He or she is also bringing another set of, features, and so this combination works the best. So to my mind, the successful are the ones where there's a win-win all across. The ones that have not worked, I've seen, are the ones which are either skewed on one side or the other. So, for example, if the issuer ends up giving too much, and then it's not a product which is sustainable for a loss, it doesn't really work. For a merchant, if you are, trying to also just kind of lock them into your product, and the customer and the card becomes very centric to your product, then it becomes only during offers and sales and stuff like that it works. And for a customer, if the card does not become a card which kind of, over a month or a quarter or a year gives them a purpose. Like, for example, an airline card, the purpose is I'm going to save through the year and then go on a holiday for free. Like a retail card is I'm going to save through and buy something for free, and all of that. So unless these three don't triangulate in a way, I've seen that it doesn't work.
Got it. And given that you've have a bouquet of co-branded cards across various verticals, and you have these millions and millions of consumers who've been using it, across many years. From a consumer's perspective, right? For example, we had a senior executive from Visa on the show who said that 1 out of 3 cards issued today is co-branded. What is making it tick, right? Like if you were to design your next co-brand, what value would you want to give, and what value do you think the consumer is really looking for?
So, Adil, I think the whole co-brand philosophy is that our philosophy is that where is the customer spending? So if you really break the pie, the pie of 100 rupees being spent by a customer, clearly there are 5 or 6 merchant categories which stand out with the spends anywhere between 5% to 10%. It could be travel, it could be utilities, it could be dining out, it could be education, and so on and so forth. So when you put all of them, those are the affinity builder merchant categories for you. So what the path that we've taken is, yes, if the customer is spending about 7, 8, 10% of their spends in a year on travel, should there be a card which kind of build that affinity and say, look, while I'm spending here, even the other spends can kind of give me those miles or affinity for the airline, etc., such that I'm able to optimize. So for us, the philosophy has been very clear: build the products which the customer would have affinity for. One, we go to the brands which are iconic, which go to the brands which have a similar ethos like ours, and we try and build and work with the best in the market to be able to give them best, CVP and service. And you would have seen, to name a few, Amazon or an HPCL or Make My Trip are really the champions in the trade that they do. So for me, the value that we want to bring to the customer should be 1 + 1 is equal to 11 in some ways, because if Amazon comes in or Make My Trip comes in, ICICI Bank comes in together, clearly they should not see that, okay, here are the certain features which I can get in some other card, and the others are just tactical ones. These have to be lasting features, something that they can build and plan for their spends for a year, and also they're able to leverage the both bank side and the partner side.
Got it. And what we see from our Bank Bazaar co-brands is, if you can get your card used regularly, you tend to become the preferred card in the wallet. Just talk us through how one should think about being the card of choice in a consumer's wallet.
Yeah, that's another very, very important aspect, because your card cannot be a pure merchant loyalty card. If that is so, then Crossword is another card, right? Just to name an example. But today, for a card to become a top of the wallet card, I, as a consumer, need to have a choice or need to have rewards on both sides of it. You can't say that, okay, here's a merchant with the co-brand is, when you spend here, you're rewarded very, very well. You go outside, you're not rewarded. So hence, one selected partner has to give me opportunity to dole out the cards more than once a month, for sure. Otherwise, this card goes to the backseat. As also, what we need to do is that we need to give more opportunities to the customers to say, look, even if you go outside of this icon. So let's take an example of Amazon. If I today, go to Amazon and spend, and when I go outside and dine, do I get some rewards there? Answer is yes. So your card then becomes top of the wallet to say, look, here is a card which has to be used wherever I go, because this is the card which is my primary card. And the rewards that I get are very seamless, easy to calculate, easy to redeem. That works the best.
Got it. And we've also noticed in India that a lot of the new and successful co-brands, and I think your co-brand with Amazon is a true example. There is always a tech differentiator. So what I mean by that, right? There is this promise of convenience. Just say, how much of a difference does that make, Amarjit?
Huge difference. And you said it, Adil, because, I mean, COVID has had many issues and problems, but they have some pluses. And this is one of the plus that we've seen that, ever since then, now customers are very used to and they're aware that, you need not touch them physically to be able to give them a product. And therefore, if the origination can happen from the partner side, if the origination can happen from any channel for that matter, and if it gets to, in a way, kind of checked for all, information that you require, you need not go to the customer at all. I mean, whether it is the NSTL or it's the bureau, all the informations are available through APIs. And you're able to quickly underwrite the customer and show them the card instantly along with the credit line that you're giving. That's quite a bit of a customer delight that we see. We've seen that in the era of physical cards, we are anyway fully digital now. In the era of physical cards, the drop-offs are far too many. And just to add, even the digital journey, just by creating a digital journey, it does not work unless both partners come together and iron out the information available with each of them, which can be auto-populated with the customer's consent, as also ask the very little information what you don't have from a customer. That's what works the best. You're going to ask them tons of information, you got tons of documents. Also, the KYC journeys are going to be, prone with hurdles, etc. It doesn't work. So digital, very thought through digital, and also auto-populating a lot of data and pulling a lot of data, from various sites to give the information has worked the best.
Yeah, absolutely. We find that just that no document, 5-minute approval, video KYC, and kudos to the RBI for making this happen, is an absolute
Indeed.
game changer because you're not meeting anyone. A co-brand credit card will be delivered to you in minutes, and there's no paperwork. At Bank Bazaar, we find that's a big feature, right? That consumers today are demanding, saying no matter where I'm in India, I can do a video KYC in 5 minutes. Now, when the innovations coming from both sides of the pie, right, Amarjit? So you have fintech, your partners innovating, you have banks innovating. Now, where are the bulk of the ideas coming from? And how do you, when two different organizations are coming up with ideas, how do you reconcile and get this implemented across large organizations, Amarjit?
That's a very interesting one, because what happens is that clearly the dynamics of credit card working is with the bank or an issuer. The outside parties may not have that deep an understanding of the nuts and bolts of this business. And mind you, this is one business, the most interesting business on the asset side, because it doesn't really work like a plain Jane, the asset model. Here, a lot of things can be worked out to be able to give certain services, and the whole CVP can be formed in a manner where you're able to balance both profitability as also the features. So what works the best clearly here that we've seen is that when two partners sit down, the objectives being customer affinity and customer loyalty, and also objective being new customers for the bank and loyal customers for the bank and the merchant. The first thing is to form a CVP together. We believe that that is, if that is done in a manner which is very easy for customer to understand and decode the value. There are cards which are lifetime free. There are cards with a certain value and so on and so forth. So consumer first wishes to see what you're extending, what value am I able to unlock, how well you're able to make that, how long does it take to crack it. I think it's the minds coming together to say, look, here is a value that we're creating, which is going to be a win-win for all three. Unless that is reached, it doesn't work. That's what we've seen. And a lot of times when there is, a push and pull on the other side, you end up skewing it and then creates hassles in future. So one is CVP. Then boiling it down to say that how both of these and also the networks, three of them come together to power it in a manner that the customer not only gets seamless onboarding, and which means no documents, etc. asked. The customer gets the right features and all that, and customer gets various offers which are bundled together, etc., and reason to therefore take out the card most of the time. And lastly, and the most importantly, redemption, very seamless, and customer service very seamless. What we've also seen, Adil, there is, people are preferring DIY journeys not only to create cards, but also on the customer service. And that's becoming more and more. Of course, it helps you reduce costs. It helps customers, get to the specifics that they want to. But I think all these aspects, when two large brands come in together, are difficult to put together. But to me, that's the big hustle. That's the most important part that we do before we go ahead.
Got it. And customers are wondering today, right, saying that UPI is growing very fast. What is the role of my credit card? What answer would you give to these consumers?
Well, UPI is on credit card now. As you're aware, RuPay, UPI and credit card is launched, and a wonderful offtake, by the way, because UPI is nothing but, a great experience. Everyone wants that experience today. And, when we rolled out, we saw the spectrum of customers, whatever affluence that they belong to, have availed, the card. So to me, this question gets asked several times to me whether credit cards are here to stay. My answer to them is credit is here to stay for very, very long, because credit always ensures that you open up the market and you grow the market. What probably is changing and may change in future is the form factor. You see, the tap and pay was never there. Chip and pin was never there. Similarly, UPI has come in, and there may be other ways that the form factors may change. And someday maybe we'll see plastic and metal also not required, and you can do it basis your phone or fingerprint or iris, or who can guess. But at the same time, credit cards are here to stay. UPI is another experience, and UPI will rather help us reach many more customers, because wherever the terminals are not there, even QRs are available there. As you know, UPI has kind of redefined the country. That experience will build only plus.
Got it. Yeah, we definitely see that, right? Because yes, it's true, UPI is growing at a 60% CAGR, but at 30% CAGR credit card spends, right? India is still the fastest growing credit card market in the world. And what we're seeing at Bank Bazaar is, Amarjit, anyone who can get a credit card wants a credit card. Why is that, right? Anyone who can get a credit card wants to have a credit card in their wallet. What is this factor that makes this almost a must have for anyone who can have it, Amarjit?
Well, that's a clear credit line in your pocket. Just imagine that today, vis-a-vis spending from my own bank account through UPI or NEFT or any other mode or a debit card, vis-a-vis that, having a line for 50 days where no questions are asked, number one. Number two, rewards associated with it. Number two, very nice CVP associated with. Number three, if you sometimes wish to expand and take EMIs out of it associated with it, sometimes you want instant loan associated. There are so many advantages. And, of course, it helps you build your, credit history. And Bank Bazaar has kind of championed that clearly for the customers who come in to understand their credit history. It really builds up from that standpoint. We do get these questions at times, rather when some customers come and say, oh, if I take a credit card, I may end up spending more than the monies that I have. Of course, that talks about the financial discipline and financial prudence, and we kind of guide them accordingly. But to my mind, it just opens up the avenues of financial freedom, availing a good CVPs in the market, credit period in the market, at the same time build a very prudent credit history. And it's a matter of time that your credit history will be across the globe. Because today, when I travel from here to US and I want to avail a card there, the bureaus being the same, this can get kind of shifted from one to the other. To me, every pocket that needs a credit card that is of a certain age, etc., and is part of the policy that banks issue it for, should have a credit card.
Got it. And let's pick on one of the CVPs, which is no cost EMI or EMI on card. This really started taking off also when you started managing and leading the credit card business. Now, tell me, in the US, they had BNPL, went through many ups and downs. In India, right, this EMI on card, no cost EMI on card has been a big winner. How did Indian credit card companies learn from what happened with BNPL and quickly innovate to such a level that today we see that sometimes the largest part of what consumers want is actually EMI? Just talk us through what happened there, Amarjit.
No, really interesting one. And as you said, we are in the festive period right now. The large sales have begun with both Amazon and Flipkart and the others. And we see a large offtake of EMIs. So, Adil, two things is what we're observing in the last few years now. One, the whole affordability story in India is holding up quite well. People have realized that something that they wish to buy is of certain value which they don't want to pay at one go, can they take it over a period of 3 months, 6 months, 9 months, 12 months? And this is a brand also who kind of comes forth and says, look, we understand our customers want this affordability, and hence we are willing to participate. So large brands, when they come to the issuers and sit down and construct it in a manner that, fine, if let's say in today's parlance, at 12% or 13 or 20% is the EMI interest rate for a year, depending from product to product, issuer to issuer, can that be worked out in a manner that the customer gets it for zero? And imagine for a customer, when you go there and putting upfront money vis-a-vis paying it over 12 EMIs, if it costs you the same, it seems like a great deal. You would want to optimize that. So we've seen this go up, and it's very interesting. Another very interesting point is even the customers who are not kind of guided through this at the merchants, we've seen them come to our app or call a call center to check whether they can EMIs post facto. And that's a very large number as well, which is, we call it EMI digitally or EMI on call. Now, to answer your question vis-a-vis BNPL, you see, we've seen the EMI in credit card holding very, very well, because it's, again, customers who's duly underwritten, customers who have large, credit lines, and customers who are availing and paying it over, down of 3 to 6 to 12 months, and so on and so forth. And also the whole activity of increase of line, etc., we do very dynamically by understanding the customer, affluence, and so on and so forth. The BNPL has paved the way for a lot of new to credit customers coming into the foray for us. We, the customers couldn't be instantly given a card because they wouldn't fit into our cards policy, are being drawn in through this. And BNPL is also working very well. It's gone through its rounds of pluses and minuses because of the the kind of customer that we onboard and kind of financial discipline that we see there. But we believe that BNPL will pave the way for the customers to move to a credit card and the higher credit lines. I mean, again, to the earlier questions, form factor may be a plastic or a line or whatever. I mean, credit in its form, it's going to stay. To that extent, as a bank, we are looking at customers who today, join us. The very next month, we optimize them for a pre-approved BNPL line or a credit card and onboard them quickly. A very large cross-section of our customers are our existing customers.
Great. We also see in our Bank Bazaar co-brand that this EMI option, no-cost EMI option, has been a clear winner, right? Two questions for you on this. And first, credit to, the credit card innovators like you and others who built this industry of EMI on card. So my two questions are, do you feel consumers are educated that a credit card offers such a powerful reward? The reason I'm saying is, yes, I find out when I'm checking out at Chroma that someone is offering it. But consumers, do you feel they're educated enough? And I know we're trying, but do your surveys show they're educated enough? And also, you very interestingly mentioned that you can take the EMI at the time of purchase on e-commerce, or you can convert later. Do more people do the former before buying, or more people do it later? Those are my two questions, Amarjit.
Very interesting one again. The communication to the customers or the awareness levels of what they get in the product is extremely low. Despite people being reached out through various means, whether it's email or a text or notification and so on, we find that the customer's moment of truth really is when you are at the counter or you're kind of shopping it online. That's the moment of truth. That's where, unless you're prompted, unless you end up asking which card has an offer, etc., it is really not known. While most of the issuers, kind of spell this out, they send certain mailers, they send monthly booklets and so on and so forth. But, clearly this remains quite low from the standpoint that, customers don't pay, that attention to it. Now, to the point, and that's the reason enough why if you go to some of these counters, you will find that, many, the forces of people available from various issues are in large thousands. You would have many of our competition, us, donning those counters and reaching out to the customer to explain, and so much so the payment aggregators and also talking about it. So it is low. Communication needs to be far more, and you have to really devise something where the customer can simply click and understand what is available. We're also working towards it. And to your second question, I think while there's a lot of work that happens on ground And while the customer understanding now is built strong, that the choices, the options, the offers are going to be available during certain periods, and festive periods being one of them. And then there are specific periods when they know now the sales are going to happen. They understand that during that time there'll be a 10%, 5%, 15%, 20% off. But during others, they have a little understanding. In terms of EMIzation, it's pretty much a 50-50 now of the customers who are availing the EMI at the merchant and the ones who are doing it outside. Now, doing it outside, some of us, the way we've done is helping us. We have also allowed the customers to club transactions and EMI. So, for example, the minimum transaction amount required is 3,000 rupees or 5,000 rupees. You could club a few transactions, and if that kind of touches that value, you are able to EMIze it today. So, from that standpoint, some of these which may not offer at the counter of the merchant, EMIzing a transaction is also possible when you come in and do it digitally or through your call center.
Yeah, I think this is, like you said, a true win-win-win, where the merchant, the issuer, the co-brand, everyone comes together and creates these EMI products. And education, like you said, Amarjit, is critical, because if I can get a product at the same price as UPI and still get, like you said, 12 months, why not? It's like someone giving you free money. We have a user question now on annual charge. Now, clearly, we have co-brands which have no fee. We have co-brands which have fee. How should a consumer think about it when trying to decide between the two? And also, right, if you look at India as a market, because you have a macro view, what percentage of consumers go for one or the other, Amarjit?
So, as I said, co-brands are designed keeping in mind what value they deliver.
Hmm.
I, as a consumer, would not really want to first look at whether I'm paying 0 or 500.
Hmm.
I'm only going to look at, for the money that I'm bringing on the table, what is the value that I'm going to unlock. So
Hmm.
clearly, if by paying 500, the value that I'm unlocking is far higher, and the product that I'm getting is to my affinity, I would go for that product. Clearly, lifetime free cards sell most because here the sometimes the customers have do not have the willingness to pay a certain amount towards the card also have an option, and many of these lifetime free cards also come with initial offers. I mean, you pay nothing and also get 500 rupees or 250 rupees or whatever to spend on, and so on and so forth. So therefore, that value, the number of cards being sold is definitely higher. But what we increasingly find is that if there is the card that is priced at a certain value, let me give you an example of our Emirates Emerald card, which is a 10,000 rupee card. But clearly, the consumer understands that you have a product. By getting this, you're going to get a membership, to Emerald. And silver membership means that you can access exclusive, privileges there. And at the same time, you are able to get certain miles which help you to fly faster, fly free, and so on and so forth. So, to my mind, one should look at what value you're going to, unlock with the money that you're paying, and decide accordingly.
Got it. And consumers are also asking, right? And this is again a live question, saying that, hey, there's a Emirates card that you offer. There's also a Amazon card you offer. How do I decide which one I should take, and should I just take both, right? How would you respond to that?
So, Akhil, this is again, when too many co-brands come in the field, you as a consumer, you would wonder as to, how many plastics do I put into my pocket? And now they're metals as well. I, as a consumer, also decide basis, what affinity do I have? So, for example, if there is the money that I have to spend in a month is, let's say, 1 lakh rupees, that is not going to be 10 lakh if I have 10 cards in my pocket. So if I spread thin that 1 lakh into 2 or 3 or 4 different cards, my whole affinity or a plan for the year goes for a toss. So there are people who do that today, also having 3 or 4 in the pocket, and they optimize basis the offer here there as well. But to me, I think a typical consumer does not want more than 2 cards. Why? Because obviously there's a fallback card that you need to have, and top of the wallet card should be the card where I need the affinity to be built on. So is it travel? Is it utilities? Is it retail? Is it an iconic membership like Manchester United? I would want to dedicate myself to that. Look at a large value that I associated that comes in with that card, and make that my top of the wallet card. So I wouldn't want to really spread myself thin for 10 different cards. Though you're going to have cards with specific affinities. I mean, every time I go to Swiggy, if I think of Swiggy as a card and I go to Amazon as a card, then you are only a deal-seeking, attitude that you bring about on the card may not extract the value outside of it. So to me, as a consumer, I would go for one or at best two cards of the ones which are of choice to me.
Got it. And last question, Amarjit, because we're coming to the end of our time. Now, as someone who's been tracking and driving and leading, this industry, if we look out from the bank side, right? You have the large banks, then you have a number of banks now issuing their own cards. You have a number of small finance banks coming in. Then you have the fintechs collaborating. If we look out 5 years from now, right, the issuer landscape, just give us a view on what the consumer is going to see. Is it going to be similar to what it is today, or is it going to be very different 5 years from now?
Yeah, I think it'll be different on few counts. One, clearly, this is a high, ROE product, and all of us understand. And issuers who have not forayed into this are clearly finding now reasons to foray into this. And the fintech slash, key partners who are bringing value on the table by saying, look, we can design it for you. We can have the right UI, UX, right platforms, and so on and so forth. So one is I would see that more players would come into the fray. Second thing that I see is a lot more alliances happening between the like-minded kind of brands here to be able to give out the products and services. And thirdly, I believe that the with the number of cards becoming larger and larger, the issuer will also believe to tie up with the brands that they want to do a long-term association for. So clearly these the tactical association, etc., may not be there for a long haul. To my mind, these three or four things would happen. And also, I think a lot of digitization will bring about a fresh, a good UI UX for our customers to intuitively work on. Because the most important factor that the users are asking for right now is don't give me any and sundry offers. Take me as a user, know me as a user, and give me the offers which are akin to my usage, and I will spend more. I think that's where we're headed.
Thank you, Amarjit. I think it's been a fascinating 30 minutes for me. I think I learned a lot from hearing your views in the market, because what we've realized on this show and in the A to Z of credit cards, right? There's only so much gyan you can give, but when you hear from the people who create these products, who offer these products, who innovate these products and set the direction for the industry, right? I think the consumers can learn so much more. You've been open, you've been transparent, you've just shared so much of your insight with us. I think this would be a great learning experience for anyone who's heard it. We really appreciate your time. Thank you, Amarjit.
Thank you for inviting me. It's an honor, and I'm sure our industry is going to grow strength to strength from here. Thank you.
Thank you. Thank you.